General. Okay. So I started in 2021. I don't know if you're familiar with Forex. So I started with that. Um, I don't know if you know like the whole pyramid scheme with the Forex stuff. Have you heard of that? It was what's it called? I started with that, and then I quit after a while. Then I started Forex again with like an individual mentor. He was a legit trader, but I just didn't stick with that. And then after a while, I just couldn't do it. And then I started up again with options. I joined, I don't know if you're familiar with Sick Boy Trades. That's actually where me and Levy met. We met through Sick Boy's Discord, and I got introduced to futures through him. And then ever since then, since like early 2020, no, late 2023, I've been trading futures. So that's just kind of my story and how I got here. My bad. Alan, you said you were new, right? Yeah, very beginner. And Joe, you too.
Got another new
What's
one.
up, Molly?
Yeah, Molly Maddie, welcome. Are you a new trader? Never traded? Have some experience? This is going to be like a crash course tonight. We'll start at the very beginning because some people are super new.
Mhm.
Molly Maddie, where you at?
Molly, Maddie.
Oh, brand new. Okay. Yeah, here, chat in here in the class chat. I'll at you. You'll see in the chat. There's actually in the class group thing. There's actually like a chat bubble on the top. Just click that, Molly, and then you'll be in like our chat thing. You've been trading for a year? Okay, nice. All right, so bear with us for the beginning portion of class tonight. We are going to do like a crash course. I know like a smidge of info, but I haven't really started getting into paper trading or anything. I want to understand and get a grasp of the terminology and apply it to the charts. Yeah, that's fine. All right, let's begin then. So, first of all, take notes. Hopefully, everyone's viewing this on a laptop or computer. You've got like a monitor. The ultimate setup is to have, 2 or 3 monitors someday when you're doing this full time, so you can just spread everything out and be well organized. Okay. Second thing I want to just note for the people who are really new to this is your friends, other people, the naysayers, they've probably said that this is gambling. It's not. There's risk to it, absolutely, but there are tens of thousands, hundreds of thousands of people, men and women, who are making a day-to-day living as a full-time day trader. Okay, I'm doing it. We're doing it. Samson's doing it. Okay, so you can absolutely do this. It is absolutely not easy. I'll just say that. You're entering a career path that is very selfish. First of all, you're only helping yourself. You're not helping society. In a sell position, you're making money when people are losing money generally, which is a little anti-American, anti-growth. But if you can just accept that, then great. Probably already have. You probably have a little gambler inside of you. You're going to need to slap that ego away from this. Okay, that's really important. So what you're looking at on the right is TradingView. It's a website. You'll have to get some subscriptions to get really serious with trading. Um, you'll need real-time data. You'll want to have multiple chart views. Eventually, you'll want to get down to the seconds chart, which is on the top bar here. You'll see there's a 30-second and a 15-second. What that is are the time frames. These are the time frames that I like to use, that Samson likes to use. We will fluctuate and do like a 10-minute. We'll add some others from time to time, but I pretty much strictly use what you see here. 15 and 30-second. I never really get into a trade on the 15-second, but I have them to view very granularly the data of what's happening inside these bars, because we're looking at the 1 hour right now, right? So 15-second, 30-second, 1 minute, 2, 3, 5, 15. So you have those fractions of the hour. Then, of course, the 1 hour, the 4. And then from time to time, I look at the day and the week. And so you'll see when I click on these, all you're doing is you're zooming out. So the week, you're seeing every bar here, every candle, green and red candle, is 1 week's time. And then when you click on the D, a day. So you can see how I zoomed out. Now it's the same picture, but there's more candles, because instead of it being a week, every candle now it's a day. So there's 7 candles representing here for every 1-day candle that there was on the weekly chart. So we'll go back to that hour chart where we were before. Okay. So just understand this is TradingView. This is what Samson, what a lot of traders use. It's kind of like the gold standard. You can customize it a lot. We'll get into the indicators later, because I want you guys to have it. So that'll probably be a next class thing. And also in the frequently asked questions tab, you can get all my indicators and how I customize them. But for tonight, let's just dive into candles again real quick. So for those just starting, the candles may not make a lot of sense. So you know already that the candle represents a piece of time that's been selected up here. So if we're on the 1 hour, which we are, each candle again is an hour. Pretty simple, right? I'm going to zoom in though. So on the right here, we're looking at NQ. So when you're searching in TradingView, you're looking at NQ, and this is the contract quarter, month, and the year of expiration. So this is going to expire, I think it's September. So next month, we'll have to change that to the next contract. So NQU 2025, NQ is just the futures of the NASDAQ 100. Okay, hopefully everybody knows the NASDAQ 100. It represents 100 companies, mostly tech. Here's the top 10. What I do on my third monitor up top is I have in my watch list all pretty much the top 30 or so of the NASDAQ. So I'm looking at what's going up and down. And then I have the top 8 here in a graphed out chart. So I have this in 8 charts on the top monitor showing me all the top 8 here. And you'll see they have different weights and values. And the companies actually change annually or even semi-annually. Microsoft was in #1 spot for a short bit, and it just got knocked down to 2 because NVIDIA has the primary market cap now. But all you need to know is that the NASDAQ 100 is the index on the stock exchange. QQQ is one of the NASDAQ indices that you can just buy shares of. That's what you call your fiduciary for. You say, hey, I want to buy another share of QQQ. That's the NASDAQ. That's just the NASDAQ 100. Then the S&P 500 are 500 companies, and you'll notice a lot of the NASDAQ live in here. They have a lot smaller weight because there's 500 companies. And so what we look at on the chart is the S&P on the left and the NASDAQ on the right, but we're trading in the futures speculative market. Okay, so that's all I want you to understand for now. We'll go into candles, but we're looking at the future indices of the NASDAQ on the right and the S&P on the left. SPY and QQQ are those current value indices that you can buy shares of. Okay, so the candles, if they're red, price is going down in that time period. If it's green, they're going up. Red is we call bearish. Green we call bullish. Bear market, price is going down. Bull market, price is going up. All you need to know about the candles are that this is the body, the big part, and the little needles are the wicks. And for red candles, the price opens at the top of the body, right here. It actually moves up to show you what happened with after the open. So the wick price opened, came up, came back down, created the body, and then before it closed, it came back down and then up again and closed here. So again, this candle right here, it opened, came up, down, closed. A green candle opens at the bottom of the body and closes at the top of the body. So when this one closed here, this next one to the right opened here, came down, went up, see the wick, then closed here. Then open, close, open, zoop, close, open, close, open, close, open. You see, and it tells you the story. You can't see how it's moved, but you can see during that time period that you've got wicks. And you can understand a little bit of price movement if we're more bearish than bullish, where the order flow is obviously bearish here. And when you see big gaps, so when you see candles that have these huge fair value gaps, that's what they're called. It indicates a high amount of institutional trading. A lot of those big guys, Bank of America, Wells Fargo, Merrill Lynch, they're buying a lot in this particular candle relative to all the others. Look at these other little candles. These are hours. Now, this is during the night. You can see that. See my vertical line? See how it's light blue here? And you got like the darker blue. So the light blue, that starts in the futures market right at about 6 p.m. That's the new day opening for futures. Futures is open 23 hours a day. And it closes at Friday, 5 p.m. and opens at Sunday, 6 p.m. So that's the new week opening gap. But every day at 6 p.m. is the new day open for the futures market. So you might get a new day opening gap, a new week opening gap. Those are when you have nothing in between it. You have literally a gap. Something like this without the needles would be an open gap. Let's hone in, though, on this bullish gap here. So back to fair value gaps. It's when you have a red or green candle, bullish or bearish. So it would be a bullish fair value gap or a bearish fair value gap, right? With nothing beside it. This was the bottom of this gap, and the top of this gap is actually the open or the close rather of this candle, or you could argue that it's the bottom, the low of this candle. Okay, so this is a rather large gap. You can see that price wants to come back down into gaps. You'll learn that gaps, fair value gaps, are what we call liquidity pools. It's where liquidity rests, and during all this big movement, price wants to come back into this because there's other orders resting here that want to get filled. Okay, and we'll get into that. But other than fair value gaps, FVGs, we have IFVGs. And so this is one over here. An IFVG is just a fair value gap that takes over or inverses a previously created fair value gap. In this case, we have a bearish fair value gap that gets inversed by the bullish. And this would actually be a great long play. We look for this type of setup, a three candle formation, a swing low, where you have a low, a lower low, and a higher low that takes out all of that gap in one candle. So you can see we came all the way up and closed here over this gap. So that's an IFVG setup, inverse fair value gap setup. That is our A plus setup. That's what we go for. And you're probably asking, why does this happen in the market, right? Why are there these highs, these lows? What's happening here? So us retail traders, we can just push the button. We can get into a trade with the snap of our fingers because it's not a lot of money. The order gets filled instantly. It's liquid. It's easily filled. The big institutions, they can't do that. They can't just push the button. They have to do something that's called generating liquidity. So the market, what you'll know now, is it moves up and down. Wow, you joined this class to learn. Yeah, market moves up and down. No, not just that. Premium to discount. Premium to discount, buy side up top to sell side down low. The big institutions cannot just press that button. They have to generate liquidity. So what the institutions will do, if they want the market to go down, they will begin pumping the market. Okay, you'll notice it here. There's a pump and then there's a quick reversal. This was, I think, the tech earnings last week. So there was a huge pump, and we completely retraced and went even past that sell side down here in discount. And that's because the market needed to create a bunch of buyers that wanted to go long seeing this pump and then take them out. Okay. So when you see these highs and lows, there's stop losses above here. Okay. People went long. They're setting their stops here. They're setting their stops here. If they're starting here, they're setting them here. And so there's liquidity resting below and above highs and lows. Ideally, swing highs and swing lows. Remember, a swing low, 3 candle formation, low, lower low, higher low. Swing high, high, higher high, lower high. You know, it's just like a little pyramid, triangle, right? So there are stop losses resting above here for people going short. They want to put their stop losses resting up here. So eventually price should take this out again. But you'll see here, those institutions needed to buy, create a buy frenzy. People started to get in. You'll notice price slowed down and it just liquidated everyone. And so that's what we're doing here. Kind of visualize the setup. So what we're wanting to see in the market is the power of three, AMD, if you will. And that's how the market moves from premium to discount in a cycle of Asia session, London session, and New York session, or AMD. It's generally what happens. You'll see things happen a little differently in the market. Obviously, it's an organic, ever changing, living creature. But for the most part, what we want is on the right. Most people trade what's based on the left. And we're going to get you away from that and away from trend trading. For the new people, you'll want to see things like this, support and resistance. And when we're going through the market and we hit resistance and then come down, retrace, and break through, a lot of people are trading that. Those are turtle traders or trend traders. And so what we're going to treat you, or what we're going to teach you to do, is to understand that that's just the market creating that liquidity, pumping through the breakout, right? Pumping through the resistance and then reversing. Because what happens with these turtle traders when they go long here is they turn into turtle soup. In the reality, it's just the institutions needing to have generated that liquidity. Okay, so that is what we look for in the market. AMD accumulation, manipulation, and then distribution. You see it perfectly here. Price didn't go anywhere for a while. Definitely chopped here for the entire night session. Manipulated down, then took everyone out here, manipulated up here, and then distributed down here. So the market will constantly move accumulation, manipulation, distribution. We want to catch the long, the big distributions. Okay? So, any questions so far? Candle example, real quick. Like this, like just like a formation. We'll go over stuff like this. Whoa. But is this what you're talking about? Looks like it's about done. So you'll see equal lows, slanted lows, the ranges, that's more accumulation consolidation. We'll talk about trend line liquidity, LR, low resistance liquidity runs. Oh, what do we look like live on a chart? Yeah, no, yeah, accumulation, manipulation, distribution. So in the 15-minute, you'll see it better. Here we have accumulation all night. See, 6 p.m., 8 p.m., 10 p.m., 11 p.m. That's the end of the Asia session. Midnight, 8 p.m. to midnight is your Asia session. 2 a.m. to 5 a.m. is your London session. So all this did was kind of manipulate and accumulate all here. Notice how we're not going anywhere, kind of horizontal in a column. Then we started to manipulate bullish, or excuse me, just generating liquidity, accumulating to buy side. sweeping enough buy side, dumping, here's your manipulation, dumping, thinking everyone's going to go short, right? Taking out all the sellers when the reversal comes, and that's your distribution all the way to buy side. Notice how much more we went in the bullish move than we did from accumulation to the manipulation. Our distribution was huge. So that's what you'll see. Okay. Let's go over some terms. SMT is a smart money technique or smart money tool. Is used when ES and NQ are uncorrelated. When ES or NQ is taking out a buy side or sell side liquidity and the other is not, that's an SMT. If ES is taking out a sell side discount low and NQ hasn't done it, that's called a bullish SMT. Price will want to snap up and also get recorrelated with each other. So we've got some answers. Samson's answering in chat. Awesome. Thank you. So we'll go over SMT again. I'll show an example. No, don't move that. Didn't get one there. We got one right here. Yeah, right here. Good example. Hard to see. Let me see if I can make that. Right here. Okay. Let me draw some lines. I love when my trend line doesn't work. There we go. Okay. It's like every other time I use it, it wants to work. All right. See how NQ took out all of this buy side, all these highs? It's a smaller time frame. It's very unnoticeable. But NQ came back up and took out all of this. ES only took out to here, the highs, and then we dumped. So that's just one example. Let me find a more clear example. Here's another one. Here's a really clear one. This one's perfect. Notice this buy side sweep. All of this, and same one here. See that? So NQ took out all of these highs. See how these highs are still left? So when NQ comes up and creates that wick, snaps up, reacts quickly because there's a wick. It comes back down before the close of the candle. You can see I even took this short. This was a small 3.6 R short trade. So it took it down to this sell side liquidity. I thought we were going to keep going up. It was because of the accumulation here. But that's a perfect example of an SMT where you're going to have NQ, that's a bearish SMT. NQ sweeps the buy side, and then we start to dump. ES was already acting bearish, and ES is what pulls the market a little bit more. It's got those 500 companies, remember? SPY, S&P 500, ES on the left. Okay? Order blocks. Let's go over order blocks. I don't use order blocks to enter a trade. I might, like 1 out of 10 scenarios, if we're acting really bullish or bearish, just to get another confirmation. All an order block is a 3-candle formation. If you have a bullish order block, you have a red candle in between 2 green. So we were coming up. This candle was to take out all the longers from here. Notice how the wick came down below the open of this bullish candle. So this is a bullish order block, and it's confirmed with the third candle, the sandwich, the piece of bread, the third candle, in this case, the green candle, closing over the open of the middle candle. So you have price coming up all the way down. Red candle really irrelevant where it goes, as long as the third candle, in this case, the bullish candle, closes over this. You have another order block back to back here, where this candle came down, right? Green, red, green. perfect back to back, and this candle closing above. This two bullish order blocks back to back, two order blocks, is called a propulsion block. And so this actually gives a boost typically because it's just nice BPR or balanced price range of red and green candles in a bullish fashion. So that would actually push price up even further. You'd almost want to go into a trade more so on a propulsion block confirmation than a just order block. Order blocks happen all the time and they get taken out as well. So that's order blocks. Protected highs and lows. I want to go over that as well. We know swing highs and swing lows now, the three candle formation. A protected high or a protected low is that same three candle formation that is taking out another three candle formation inside of the same fair value gap. And so it ends up making it protected. So you can see how this candle price came all the way down and then it just shot all the way up. And one thing that was helping this to come all the way up was that we came all the way down to a significant low, a 4-hour low that I was pointing out earlier, 780. And we have this bullish gap. So we have a swing low, three candle formation, low, lower low, higher low, and a swing low taking out another swing low inside the same fair value gap. So we came down, took out all of this sell side liquidity all the way since August 1st, all the way back to July 7th. That's a significant sweep. Notice how there's wicks, confirming a quick reaction in this time zone, in this fair value gap. We came down almost into the 50% of the gap, clearly took out the one swing low. So this confirmed a protected low, also bouncing off of the bullish fair value gap. So that's two sets of extra confluences to get you into the long trade. And we're in discount. And I'm sure we have some aiming points, excursion points. So that gets us to taking a trade. All right. I think that's a good segue. Samson, you want to go over that? Like how you take the trade, like actually execute what things are worth, like the values of each, the points on NQES or MNQMES.
Yeah, sure. Typically, I like to trade on. Let me open up the charts real quick. So yeah, I use NQ and ES as like charting confluences and just off entries. But when I'm actually placing a trade, I use MNQ, which is micros. Is it micros or minis?
MNQ mini, micro.
Yeah, I get it mixed up. So MNQ is micros, which is just it's it's basically a smaller version of NQ. So I think per tick it's like $5 a tick versus NQ where it's 20. Is that right?
MNQ2 a tick or a point. MES $5. So then it's 50 and 20.
Okay. So yeah, I use MNQ for entries. I never really enter my trades on ES. I just like the way NQ moves better. I like the way it just flows through price action. Again, you could use whatever you want, but that's just the one I usually use. Um, so basically when I'm entering a trade, I enter on my prop firm account, which is Top Step, but I use TradingView to calculate my entry size. So let's say oh, let's say I want to go short here, right? I enter short position. I want to put my stop loss at this high, and I want to target this low. So that's a one-to-one RR, and you use this tool, calculate how much you want to risk. So let's say you want to risk like $500. You type in 500 and it'll spit out the amount of contracts. So on MNQ, that's 15 contracts, but on NQ, that's like 1.5 contracts. And obviously on NQ, you can't use 1.5 contracts. You can only use one, two, or three. So that's why I use MNQ to get better price and just calculate my risk way better. And yeah. Levy, what else should I go over?
Um, Probably equal highs. Like I love doing the S tier, so perfect equal highs.
Okay, for sure. So equal highs, I like to use it as a strong draw on liquidity. Um, let's find an example. It's basically like stack liquidity, but and usually equal highs are best used on a higher time frame. So the easiest way I could put it is just two wicks from different times that are like exactly at the same point. So let's use this example on NQ. This is just one of the things I use as a draw on liquidity. See the 30-minute. Man, I'm trying to. Maybe we could use an example from market open. Um, man, Levy, do you have any examples of equal highs for any trades we took?
The problem with that is in the indicator, it deletes them after it gets swept, so it doesn't show it anymore.
Uh, okay.
But
So
yeah, definitely use that indicator if you don't, guys, on TradingView. It's in my
pull at it right
FAQ.
now. What's it called?
It's called equal highs and lows.
By Pro Value Trader.
Who else says it has it? Let me see. Equal highs and out of options.
By who?
Out of options.
Oh, right here. Um, man, I'm trying to find an example for you guys. Right here. So we're just gonna use this as a quick example. Again, this is relevant on any time frame. So when you see two lows like this is considered an equal low. Like literally separate draws on liquidity, but exactly at the same level. So you have so these are equal lows. You're gonna have a bunch of unfilled buy orders. So typically we'd want to come down and sweep that before making it move higher. So this is an example of equal lows. So on any time frame, this can be used as a good draw. But we always want to see it delivering from something. So let's say Let's say we're sweeping liquidity like back here. Let's say this is buy side liquidity. There's a wick up here, and this is on a higher time frame. We want if we see let's say we create some equal lows. We have market open. Price moves up, up. We sweep liquidity, and we get our entry model. We could target equal lows because we basically have stack liquidity down here. And same thing for equal highs. See an example of that. Um, Again, guys, this is used on any time frame. Okay, right here. Um, I'm just gonna draw it out real quick. This is a good example of equal highs. Again, that's just an example I made. Again, stack liquidity, a great draw. You want to see some reversal from sell side. Let's say this is sell side right here. You want to see a sweep of sell side and then see some sort of reversal, and then you could use equal highs as a target. These things are supposed to be used as confluences for your draw on liquidity. I mean, that's just like the best way I could describe equal highs. Just basically stack liquidity, two wicks that are exactly at the same level. Levy, what else should I go over?
Um, that's it. I mean, that's just, yeah, like S tier for when you take a trade again, because when you're in a trade, the most important thing is to get out too. You got to take profit. You got to realize the profit. So perfect equal highs, more than 3 candles away on whatever time frame you're looking for the trade. That's significant. That's S tier. And then like the
Yeah.
data highs or data lows with giant wicks taking out buy and sell side. So we'll go over the one setup for life at some point, probably tonight.
Yeah.
Um, but as far as like excursions, equal highs, equal lows, that's mostly what we're looking for. How about we do?
Mhm.
You want to go over real quick like trendline liquidity, engineered liquidity, LR, LR?
Oh, for sure. Yeah.
Awesome. Let's do that.
Um, so let's start off with like LRLR. That's also known as low resistance liquidity run. And typically with that, we use that as like a bias to target buy side or sell side. So let's get a good example of that. Um, I'm trying to find an example where we generated LRLR and it was ran. So right here is a pretty good example. Pretty good generated liquidity. Let's say we have buy side right here. Um, We've generated some pretty good LR. And now from there, we want to just see it get ran. LR just basically generate liquidity, um, or stack liquidity. And usually LR is generated overnight. So typically then during market open, we tend to run LR. So let me see if I can find another example. Like right here is a pretty good example of low resistance liquidity run. Again, we're not always gonna like run it, but most of the time, if we do see a reversal, we could use this as biased to move higher. It's also just another form of stack liquidity. Levy, do you have anything else to add to that?
No, that's pretty much it. I mean, just remember with LRLR, whether it's on its way to buy side or sell side, that if you can draw a line and like five touches, five highs or lows are hitting it
Mhm.
exactly, you have that linear trend line. That is, you're seeing LRLR, whatever the time frame, and those highs or lows are going to get run. Just know that.
Yep.
That's all. Yeah. Um, I guess I can go over my setup and then some other vocab, and then we can
Okay.
end with one setup for life.
Yeah, that works.
Let me make sure this. Let me know this looks clear. Does this look good? Does that look clear?
Yeah.
All right, awesome. Just want to make sure. I'm gonna boost the server probably this week, so it gets the HD streaming. If anyone has boosts, oh, I would really appreciate it. I'd even like Venmo a few bucks, like $15 for a Chipotle bowl or whatever. That'd be awesome. Because yeah, if we get two more boosts, that'll get us HD streaming. So I think it'll look even more clear. I don't think the audio gets better until the next one. We already have the increased audio quality. But yeah, let's go over daily setup, like what I do each morning. And then after daily setup, some vocab. And then we'll go over one setup for life. Um, I think what's really important to know first, we did the trend trade, right? We talked to power of three. This is accumulation, manipulation, distribution. Remember, we're always going for distribution. The A plus setup. Let's go over this real quick. We'll do A plus setup, um, and then we'll go over the daily setup, morning setup. So this is what we're looking for. Forget this high here that's getting swept. This could be Asia high, London high. This could be data high. Any type of highs here that are getting swept on a major time frame, premium getting swept. We're looking for that fair value gap to launch us into that, a quick reaction, that wick, and then the inverse fair value gap. The fair value gap getting inversed by the other complete fair value gap. Not it's stepping down with multiple candles, one solid candle. Perfectly, it would be this red candle, this black candle, completely closing below this candle in a swing high 3 candle formation. That's the perfect setup. It's generally going to happen in the New York morning session, right? New 9:30 a.m. Eastern to 11 a.m. Although some pre-market trades I will be up for. I'm up at like 7 a.m., 6 a.m. So I'm usually live at the latest 8, hopefully 7, 7:30. I can call out signals and alert you guys when I'm looking at stuff that looks really good. So just make sure you have notifications on as well in Discord. So you have that major liquidity sweep, the instant reaction, and strong momentum. That's the IFEG taking it out within 1 to 3 candles ideally, and then the clear targets. Remember those clear targets: perfect equal lows, in this case below, that are more than 3 candles away. A tier would just be perfect equal lows 1 to 3 candles away, and the trend line liquidity, where you have the low from LRLR formed, and I'll show you that in live. I'm always educating in live. um, but that's it for A plus setup. It's simple. You'll see it. It'll become robotic. You'll see it and you'll just take the trade. Yeah. As far as daily setup, all I do is I take my Fibonacci retracement tool. So you'll have on the left here all these tools. Look in the Fibonacci section. The first one, Fib retracement. You'll use this a lot. All it does is it creates a little chart showing you the high and the low and where that 50% is. So you'll put it from 6 p.m. to current price. So what I did here last night, the low is down here at 6 p.m. on NQ at 22,821.75. So we put that low there, and then we just dragged. And before market opened, that high was, at 7 a.m. it was here. Okay, so that was your 50%. You can notice price tapped it, kept going. And then as price opened up, market open, you just adjust it as you go. So you always have a 50% buy side, sell side, premium, discount in mind, because price will like to come back down and take out 50%, the 50% typically. You can always take a play where we dip into discount, and that's how you also get your confluence, where you're only longing in discount and only shorting in premium. That'll keep you safe as well. That's one of the levels of confluence. Okay. The other one would be the protected low that you're getting, an SMT that you're getting. You want to have at least 4 levels of confluence. I like the trades that you have about 5, and the 6 is when you have like everything. Everything is stacked up, lined up perfectly. But other than that, for morning setup, that's it. I'm kind of just looking at where we are in the market. So are we inside of a fair value gap, specifically the 15-minute or 1 hour? So before here, during overnight, Asia and London session were created. Again, Asia 8 p.m. to midnight, London 2 a.m. to 5. And I just looked. So during this whole time, we were inside this big bearish gap. I wanted to see by the morning market open, are we going to close over this gap, which we did here. That would indicate some bullish. There was the pullback retracement before market open pump. And, that's what we do every day. We're just looking for these moves. Off market open, you can expect one of about 3 things. The fourth and least common just being a horizontal column chop, but you can expect a direct movement open, which is what we had here. We just kind of just pumped off open. That's one of the least likely things that happens at market open. Just remember that. We don't like to take trades right at 9:30, right at market open. If you're just getting into a trade previous to market open, best to get out, take your profits, or leave that runner. That's like 1 or 2 micros, because market open can get very volatile. The other option at market open is just a manipulation leg. So price will take out some buy side, pump up for a second, reverse, and just dump. So people will expect the off open pump. They'll be going long. Nope, that's the generated liquidity by those major institutions, remember, to reverse and go short and just dump. So that's the manipulation leg. In the event of it, or the example of market going down, it'll be off open, a pump, then a dump. The third option is called a Judas swing. If you remember in like the Bible or whatever, biblical terms, you have Jesus was betrayed by this guy Judas. So one of my mentors created this term Judas swing. It's when you have a double fake out at market open. And the market likes to do this pretty often. This is almost the number one thing that'll occur in my experience. And that, if the market's going to pump, it's going to first pump, reverse, dump a lot, take out the sell side liquidity, and this will all be part of that M manipulation in the power of 3, and then it will reverse and pump through everything. Okay, and so we see that a lot at 9:30 when we've gotten an 8:30 huge data candle. if we haven't swept either side yet and we're still in the range of the single data candle, because data candles will give us like 100, 200 sometimes point body candle, or from top to bottom wicks, 100 or 200 points. Those are great data candles. And so when it sweeps buy side and sell side, we look for, um, after it takes out one side, to target the other side. Okay, premium to discount, buy side to sell side. And so that leads me to the one setup for life. And that is pretty simple. That is when we have a giant news candle. I'm trying to remember when we had a news candle. All right, see you, Molly. It's taking off. Trade recaps. News candle. No trade recaps with news. Well, we'll just make it up for now. So if we were to get a huge data candle, use my brush, a huge data candle. Oh, this is going to be so shitty. Hang on. Get a huge data candle that takes out all buy side and sell side, right? Like that in this case. Forget what happens to the right. Or let's just move it here. Let's say news came out right here. We take out all of this and all of this. Okay? See that? Buy side swept, sell side swept. Then what we would look for after the data candle is either side to get swept, so new candles would form. There'd be this candle, and then we're moving up. You'd look for the sweep of the high, the reversal pattern, and then we get to target sell side. And what you'd get in here after the reversal and during to take it out is just BPR, balanced price range. You want to see price moving smoothly, not erratically. We'll go over that as well. Good PA, good volume and volatility. Obviously, it's the morning New York morning session, so you're getting the volume, but good volatility. Typically, we will get that as well, because if we get a huge news candle, that's tremendous volatility being injected into the market, lots of trades. And so after it's swept buy side, the BPR has come up, swept buy side. You're getting just green and red candles, one after the other, order blocks, maybe propulsion blocks, fair value gap getting created, a small one. Then we dip down, retrace it, respect it, and keep going. Just respectful order flow and respectful PA, taking out the buy side. The nice 3 candles swing high reversal, hopefully delivering previously from a bearish fair value gap, because remember, that's going to act as a liquidity pool to push back down price. If it's a bearish fair value gap that we're getting up into, price may want to push it even more down, right? That'll add that confluence, and you'll target the short, or excuse me, you'll target sell side, the bottom of this wick. Okay, so that's just very simply one setup for life. I made a mess. Anything you want to add to OSFL, one setup for life, Samson?
No, that's pretty good.
Awesome. Yeah, it's simple. As far as other terms, let's jump into that real quick. Ask any questions, guys, too. If you have any questions, please. Okay, so vocab. I have a video on this too in class recordings. If you want a recap on this, I go into it a little bit more in the recording, and also stop me, ask me to drill in a little more, elaborate on any vocab term. So BPR, balanced price range. That's when, again, I just said you're getting nice red and green candles, prices moving in one direction. You're getting some occasional fair value gaps that are being respected. If it's bullish, price comes back down, dips in, keeps going. This is kind of BPR here to buy side. BOS, break of structure. That's just when you see price breaking a trend line. It's also change of character. So when you see price, I hate this tool. It really hates me. Look at that. It doesn't, I have to draw it and then bring it over. So when we break this, that's a break of structure. We have a structure here, and we're changing direction. That's also a change of character. Samson, help me. I forget what the fuck is the difference with, excuse my language, but with break of structure. How's that different than change of character? Is it like
A break of structure, honestly, it's all very similar, but I think a break of structure is the same as like a market structure shift where we close above the wick, and changing the state is when we close above the open of the candle.
okay? Yeah, so I guess change of character, that's just even more when you just continue a different whole trend line, not just closing
Yeah.
above it. Change break of structure.
Mhm.
Break of structure is more of a
I mean,
micro
at the
level.
end, yeah, at the end of the day, they're all very similar. It's just kinda up to the person what he wants to use, you know?
Hmm. Exactly. Alan, got a question. Is there a certain way to have your Fibonacci retracement in the settings for TradingView? No, no, no. That's I think that's it. It's just yeah, fib retracement. Um, no, you can change the colors if you want. I have the trend line showing. I only show the 1 and the 0. None of the other things. You can add different lines if you want, but I just want the 50%. You can change the like the opacity to make it like more opaque. But that's it. Very simple. And to show only on seconds, minutes, hours. So when I go to days, weeks, it's just not necessary. Okay, the 0.501. Perfect, Alan. Back to vocab. DOL. DOL, draw of liquidity. Where's the draw of liquidity? That just means where's price headed. So right now, where's the draw? The draw is probably buy side further up, somewhere up here, these highs that we haven't touched yet, into this bearish fair value gap. See that? Because we're so bullish, the draw is to buy side, where the draw on liquidity is probably some of these highs. There's swing highs here, resting, stop losses above. That price will want to take out from these people still holding shorts. IFVG, you all know, inverse fair value gap. FVG, fair value gap. Those are the candles, the bodies with gaps. HTF, higher time frame. That's when you just want to zoom out and go from like the 1 minute to the 15 to the hour to the 4 hour. That's what we're talking about when we say higher time frame, HTF. KZ, kill zone. I don't use that too much. LQ, liquidity. Kill zone is also just known for like lunchtime, noon to 1 is known as a kill zone during that time period. Price wants to seek other liquidity and take out highs and lows. Same with like 3:30 to 4, right before market open and during the 3 to 4 power hour. You'll see price switch abruptly and want to take out the liquidity that it hasn't in a while. So price is moving a little bullishly up. It's going to all of a sudden flip, dump, take out those folks, and then kind of burn off usually until about 4 at market close. LTF, lower time frame. Go figure. MMXM, market maker, either S or B, market maker sell or buy model. That is just power of 3. That is exactly what you've seen, what we keep showing here. This is your buy model. This is your sell model. Sell model is when, again, you know, because the institutions are pumping, they're bringing price up for that reversal manipulation leg up to dump in the distribution. Okay. MS, market structure, NY, New York. OB, order block. OF, order flow. This is also all on the vocab terminology page. Don't forget. And there's the video. PA, price action. Previous day high or low, PDH, PDL. PO3, power of 3. Oh, we'll go over break even and just we'll do break even right now. So yeah, when you take a trade, if we were to take this 15-minute long down here, Alan, let's say we took it off of the close over this fair value gap. So you'd enter the trade right here off of this candle, closing over. You'd set your stop loss a close below. In this case, you have connected bearish fair value gap. So if you wanted to be very safe, it's a really big stop loss, but your stop loss would be down here at the close below the gap. So these gaps are going to be connected and then you have the close here below the gap, or this close below the gap. It's up to you. I would usually go for this bottom close. But for break even, it's just when price, after you've entered this trade and we've closed over, you take the next liquidity pool, or IRL. So intermittent or internal resting liquidity is IRL. And so that just means the inside resting liquidity. So this is buy side, this is buy side. These are IRL, internal, because they're still price external to these highs. IRL buy side, IRL buy side, all the way back up to here. That's ERL buy side, all time high, because there's nothing beyond above this. So that's ERL, external. So once price, when you're in that long, comes up and reaches internal resting liquidity buy side, that's when you move to break even. Oh yeah, B, yeah, break even. That's all. PWH, PWL, previous week high, previous low high, PMH, PML, previous month. EQ, equilibrium, that's the 50% of the Fibonacci retracement. RR, risk to reward, or risk reward. When you see RR like a 3.0, that just means it has a 3.0 risk to reward. So if on a 3.0 trade, either long or short, doesn't matter. If you risked $100 on a 3.0, you made 300, is what you would safely say. On a 10-point RR, risked 100, made 1,000. SL, stop loss. You know that one. TP, take profit. That's when you realize the profits. So you're setting a limit order when price reaches that high. And I'll talk you through it when we're doing a trade live of exactly what we're doing. And we market buy. So we hit the buy or sell button at market. So it gets filled instantly at the close over. That's how we take our trades. LOD, low of day. HOD, high of day. SMT, we went over smart money technique when ES or NQ are uncorrelated and one of them is sweeping a side of liquidity when the other is not. That's a great confluence added to the trade. NWOG or NDOG, new week or new day opening gap. That's pretty much all of the abbreviations that we use. So that's pretty much it for vocabulary. Went over A plus setup. We went over order block, SMT, protected low, taking the trade. We'll deep dive into that more. I'll be live by 8 a.m. tomorrow. Keep in mind also, just another reminder, I got to keep saying this, drill it into your heads, that when you take a trade, you have to already have the exit point in mind before you get into the trade. So we'll go over all that, all the things to do, the things not to do. I'll point out, the bad fair value gaps, the better fair value gaps, the great fair value gaps. All you have to do is show up. I'm also, usually if it's not class, I'm viewing the Asia session. I have been watching it slowly pump up since we started class. There wasn't really an SMT on the 1 minute that swept enough sell side, but yeah, just know that I'm always here looking for quality setups for you guys. I want it to be where I'm teaching you to fish so you can do this yourself. But to get you guys up and to speed as fast as possible, it will take, kind of being a signal service and getting things going that way first, just so you guys can do things with the most success. And so you guys don't lose or blow your accounts. As far as getting an account, I recommend just paper trading for those that are just starting. So in TradingView down here in trading panel, no subscription necessary, nothing. You click paper trade, you'll connect it, and you will select like $1,000, $2,500 is a good one to start with. And it'll just be fake money using the real data in the market. You'll take the trades with us. I can show you the trading panel, how you actually execute the trades, but that will be what you're going to do to start paper trading. From there, you can use what you've heard about those prop firms, proprietary trading firms. And that's where you're getting evaluated first on an eval account. You have a profit goal and rules that you have to stick with. You have to trade a certain amount of days. You have to hit a certain amount of profit. You can't have too much profit, in one day relative to the maximum to the total profit that you're getting. And the profit goal itself, you obviously have a drawdown, so a losses limit of about 2,500, and that trails with you. So you always want to realize profits along the way too with prop firms. So after the eval is passed, then you go into the funded account, and from there, if you follow the rules and take good trades, you can request payouts, and that's how you can start to make this a living, and you're getting money, real money, sent to your checking account. From there, you then open a live account, and that's when you're depositing your own cold, hard cash into a brokerage account, and you're trading just like that with your own money. You're risking your own money on the stop loss. You kind of want to trail stop loss because of commissions. Even on a break-even trade, it'll charge you sometimes, a buck, some cents. You want to have a little profit there, always to cover those commissions. But we'll go over everything, baby steps. You got to walk before you can crawl. Or sorry, whoops. You got to crawl before you can walk, and then we can be running. But yeah, I think that's just about it for tonight. I think that's a good end point. Any other questions? Thank you so much, Alan. Any other questions? The next class, probably Wednesday or Thursday, leaning more towards Thursday. Because Wednesday night, some people do like midweek cruises, car meets, all different types of stuff. And what was it? Yeah, by 8 a.m. I'll be live, hopefully earlier. Tomorrow morning, we have 10 a.m. PMI news to come out and some little 8:30 news. So perhaps we'll get a one setup for life, OSFL setup. That would be great. But in terms of just financial news this week, not so great. I do recommend bookmarking this website, Forex Factory, and then you can filter based on just USD, and you can show all yellow, orange, and red folder news. You can go by the day, the week, etc. And this is always what you want to know about. I will keep you informed, but you'll eventually want to have this yourself. You never want to trade into news. So you want to wait for the news to be released. That's when you get the candles, because you'll get huge volatile candles that'll just destroy your trade. So we wait. We don't try to predict too much. We react. We react to the market here. So yeah, next class Wednesday or Thursday, probably 8 or 9 p.m. Eastern. Don't feel shy. Always DM me, Instagram or here. Soon we'll have website launched, ads running. There should be a lot more people attending. But yeah, just trying to keep growing this community. If you wouldn't mind, as things go, not tonight, but as you start to pass evals and stuff, always post your trades in profits, post it in chat, the screenshot I posted, how you can illustrate, do the screenshot, how you actually use the long or short position here in the projection tool. So how to use this. I recorded one of those classes tonight in class recordings. So always post that, share this with your friends, make a story on Instagram, but wait a little bit till you actually see some value, you've learned a bit. You can start to share this stuff with other people. We got some typing, so I'll just wait. A quick trades chat. Yeah, I can do that. Another channel for people to just post instead of like profits. Yeah. And I'll help you. We'll point out all the confluences, Alan, and then you can start taking those trades just tomorrow morning, paper trade. No using real money yet. No point. No live account. Don't even think about the live account. That's just off your radar. Yeah. Awesome. Samson, anything else? Any other terms? Beginner tips?
Honestly, you covered most of it. I'd like to add that for anyone starting, you could start on a prop firm or paper trade. When you start on a prop firm, like Lovey said, it's not real money, but it's just a good way to start. You still are generating some sort of experience while also working towards a funded account, and they're very cheap and a great way to scale. So, yeah.
Yeah, FX Replay. We both have a subscription there. We love it. We'll use that for back testing. We can incorporate back testing in next class. We can do another longer class, full hour and a half, maybe to 2 hours. No problem with that. We can do back testing. But yeah, to get yourself FX Replay, I think there's a free version. And for Joe, do you sub any? Will you subscribe to anything to better learn, or should I keep the free sub? For my server for Liquid Levy, you're in. Your premium, everything. There's no monetization yet. That'll be in a little while, quite a while. So you don't have to worry about paying or anything. For TradingView, yeah, unfortunately, if you really want to just go out with a bang, you want to get their. Let me show you. The premium version. There's expert. You definitely don't need that. Premium is probably the best version you could get now, or you could just get the one under that. The reason why premium is so good is because it gives you the seconds. It's the first tier that gives you the seconds charts. And they do that on purpose because they're valuable for day traders. The 15, 30 seconds, you can get different seconds below that, 10, 5, 1 by the tick, gets really granular, but I like 15 and 30 seconds. You will not have these unless you have the premium one, the premium subscription. Outside of this, as far as tools, there's also Tradovate, Tradovate. That is the tool that you execute the Apex, Top Step, the um, prop firm account trades. That's where you execute from. Tradovate allows for a little more accurate PA. You'll see the price move a little faster, giving more real-time price. On the depth of market or DOM sheet, you'll actually see the price moving up and down by the tick. So I recommend Tradovate. That allows you to copy trades. So we're getting a little more technical, where eventually you'll be taking trades, 1, 2, 5, 10, maybe 20 times. So I have 20 Apex accounts. So when I take a trade, guys, sometimes I'm taking it 20 times. Not always. I also have groups of 10, of 5, and I'll do single account trades as well. Sometimes I'll alert, if I like it so much, I'll copy trade. You'll hear me say I'm copy trading. So essentially, I can take the trade up to 20 times if I'm copy trading the 20 accounts all at once within Tradovate. Okay. Also, just always keep in mind that we don't trade, we don't execute on NQ or ES. We on the micros. We take it on the micros. MNQ, MES. So you'll have another window open that you'll switch between windows where you will execute and press the trade either in Tradovate or on the TradingView tab, Trading tab, in MNQ or MES. We chart, we do all the trend lines, we look at order blocks, the fair value gaps, IFVGs, everything else on the actual indices, NQ and ES, because that's where the trading, especially the institutional trading, actually occurs. Okay. So your TP or stop loss is negative, positive 10 or 20x. It's not necessarily like X. Again, TP, we're aiming for those equal highs, perfect equal highs, or relative equal highs, or the data highs. Stop loss is always going to be the close below of the fair value gap we're inversing. So we'll go over that in the live again. I'll show you when I'm taking trades. And the stop loss is typically, no more than, depending on the risk again, 20 or 25 points. Now, you want the stop loss to be a monetary value. So typically people risk 200, 250, 500 a trade, or when they're copy trading, 100 per account. So if it's 20 accounts, they're risking technically $2,000. But you keep the stop loss in a monetary amount. That way, if it's a 10-point stop, you're taking micros $2 per point. If you want to take the full mini, that's 20. That's a 200-point stop on a 10-point stop loss. Okay, because 10 points of stop loss, 10 points to go towards hitting your stop loss. If you're going to use a full full mini, which is 10 micros, it's $20 per point. 20 times 10 is 200. So if you're risking 200, if you have a 10-point stop, you can take one full mini or 10 micros, because a micro is a tenth of a mini. All right, I guess that's it. We will end tonight. Thank you guys so much. I'm gonna post this recording on YouTube and then in the Discord as well. Again, any other questions? Don't forget to just throw them in. Don't be shy. Tell your friends. We'll be live in the morning. Samson, thank you so much. Have a great night. Have a great night,
Thank you,
everybody.
Levy. Amazing class.
Awesome. All right, guys. Have a good night. We'll see you tomorrow.